Okay, so this is actually, I'm reading from notes again, so I'm just letting you know that if I'm not looking into the camera, it's because I'm reading from notes. Trend Trading Bootcamp Day 2, Trading with Rayner. I'm just doing, documenting what I learned. I'm putting it on video, and here we go. The Day 2 video was 1 hour and 42 minutes, and 3 things required to succeed is an edge, risk management, and discipline. Those are like the main ingredients to success. An edge, risk management, and discipline. Also, another thing that's very important is to keep a trading journal. So you could look back on it, update it, develop a strategy that you're consistent with. If you have a journal, you can, I personally keep a journal. I think it's amazing. And I just started keeping a journal like in the last maybe year. And I'm telling you that it's unbelievable. Know who you're profiting from. When you're taking a trade, you should know who you're going up against, and maybe do some research papers on different things, whatever. I'm not really sure what research papers he was referring to, but you could do research papers on Forex. Know who you're profiting from is very important too. Are you profiting from other retail traders? Are you profiting from big banks? Are you profiting from hedge funds? Who are you profiting from? So then just a couple of things. Risk management. Mandatory for long-term success. Consistent actions give you consistent results. Now, one thing that he was saying, which I really thought was interesting and true, is that even if you're consistently a loser, yeah, it's still good, because you can go back, you can make changes, you could modify, and you can enhance whatever you're doing and make it better. Okay, but you got to be consistent. And if you're trying a strategy, you can't just go 2 or 3 trades. Oh, it's not working, I'm going to go into the next one. I'll mention this at the end as well, because my notes are at the end, but what he was saying was that in order to see if a strategy works, you pretty much need 100 trades. You can't be flipping back and forth from strategy to strategy. I have my own strategy that I use, and I'm sticking to it because I like it and it's working for me. And every day I use it, it works better. So it's important to stick with the strategy. The R concept is the risk to reward ratio. And that meaning that if you're going to take a trade, you shouldn't be risking $500 to make 100. Your objective is maybe risk 100 to make 300. Have a good risk to reward ratio, because with a good risk to reward ratio, you could lose quite a bit of trades and still make money. If you're losing $20 in a trade and making 40, or losing 20 and making 80, you could lose 4 or 5 trades and then profit. And so you got to have a good risk to reward ratio. 4 stages of the markets was something that he talked about, was a cumulative stage, advancing stage, distribution stage, and declining stage. A cumulative was ranging in a downtrend. The way you can identify is if the 50-day moving average is flattening out, price is flipping back and forth within the 50-day. And then what's the best course of action? Okay, so if you're looking at a cumulative stage, if you have the 50-day moving average and it's going down and then it starts to like flatten out, you know that that's the cumulative stage. Okay, then the advancing stage is an uptrend, more bullish candles than bearish candles. 50-day moving average is pointing higher, and what's the best course of action? Distribution stage. Distribution stage is ranging in an uptrend, 50-day moving average shortening or flattening, price whipping back and forth through the 50-day moving average, and then best course of action. Then we had declining stage. It's a downtrend, more bearish candles than bullish candles, 50-day pointing lower, and what's the best course of action? Suggest to read on his site, if you know his site, Trading with Rayner. He has a lot of good free material. I mean, one thing about I really like about this guy is that he's always putting out new, great material. A lot of it's free. I mean, a lot of it, you can learn a lot by not spending a cent on his site. If you want to go and take the Pro Edge course, or you want to take the UPAC course, or there's a lot of different things that he does that he charges for, but it's not necessary. But if you want, you can. If you're making some money and you want to have more of like one-on-one or more guided, taken by the hand, you might want to pay for a couple of his courses. But like I said, it's not necessary. Trading with Rayner, it's an amazing site. He's very dedicated to his job. I mean, it's for him. He trades and he teaches, so that's all he does. I mean, and he has a family, of course. So he's a good man. Then he was saying, oh yeah, so he was saying on the site there was a trend trading strategy guide on his site, free download. It's great. You put your email, you get it. Okay. Here comes exciting stuff. How to tell if it's a cumulative stage or distribution stage. Leaning against the higher time frames. He was saying that on a daily, when you're looking at it, you could use the daily and the 1 hour. And the reason why you want to use the daily and the 1 hour is because when you look at the 1 hour, you could see the accumulation stage in the 1 hour, because one, if it's accumulating, okay? And then on the weekly and 4 hours. So if you're looking at the weekly and then on the 4 hour, you could see it's accumulating. So the two time frames to look at together in this situation is the daily and the 1 hour and the weekly and the 4 hour. Okay, and then if you're gonna put support and resistance on those charts, make sure that you're using different colors so you can tell. Anyways, he suggested also if you're taking trades that use 1% risk per trade. So if you're trading with, let's say, 100 grand, you'd risk $1,000 a trade. If you're trading with $100, you'd risk $1 per trade. So everybody has different budgets to trade with. So basically that's it. So there was a little recap there. He was doing 3 things required was the Archon. Yes, I'm not sure actually what that was. That was the what, why, and how. I'm not really sure. I think my notes aren't good on that. One thing he says that every time he opens, by the way, this is, I'm telling you, but it's for me to look back on. Every time he opens a chart, he asks himself, is it an uptrend, a downtrend, or is it in a range? So that's immediately, chart opens, he's like, what's happening here? Is it up, is it down, is it ranging? So these are questions that come into his head immediately. Okay, there was some questions. So then again, 100 trades to determine if a strategy works or not. The only indicators that he uses is the average true range and the moving average. And he was also saying amount to start if you want to start trading. He was saying $500. The truth is, with $500, you're never gonna make a cent. I tell you that right now. Unless the only way you're gonna make money, which inevitably you're gonna lose at the end, is that if you're taking big risks on a high leverage account and you get very lucky, 10, 15, 20 trades, you could turn 5,000 to 10, 20, 500, 10, 20, 30,000. But that's not consistent, because if you do take big risks and you don't have proper management, one trade will blow that all away. So that's not really good. But the truth is, if you want to just practice, the one thing to do is you can always open a demo account and they start you off with 50, 100 grand. That's good too. Starting with $500 is good. It's decent. You're not gonna make any money, but it will give you if you don't have money in the market, you don't feel the same way. Your emotions don't flow. And I think that in order to trade consistently, you have to have the emotional impact when trading. Because if you have no emotion into the trade, it's like, whatever, lose 50, lose 100. If it's not real money, you don't feel it. So maybe a good amount to start with is 500, and just to take smaller trades and do like nano lots or whatever, just to get into it. And that's basically it. I thought it was a great course. Bootcamp day 3, I'm going to start. And this, like I said, this is just to document and keep an idea of what's going on, and I can look back on it, and that's it.